Hello, everybody. Once again, welcome back to Debits and Credits with Haas and Dawe. And today we're going to talk about the Department of Financial Protection and Innovation and the regulatory audits. These regulatory exams are allowed under the California Financial Code, and it's in Code Section 17406, etc., that allows them to conduct examinations, surprise audits, so to speak, whenever they want to come into an independent escrow company and review books and records relative to the trust account and also relative to the general account to make sure that the escrow company is in compliance with the escrow law. Now, the escrow law is part of the 17,000 series of California Financial Code and the 1700 series of the California Code of Regulations. And these audits can begin as early as within 6 months of when an escrow company receives its escrow license from the Department of Financial Protection and Innovation. From here on out, we'll call them DFPI. And in the financial code, it does say that the department has the ability and tries to come in within the first 6 months of licensing. They call it an introductory audit just to see if the company is in compliance with some of the basic record keeping rules of being a licensed escrow company. In the reality, though, with staffing cuts and budget limitations, the DFPI doesn't always make it within the first year of business, and it may be within a year or 2 years after licensing that they may come in. Now, once a company has been licensed and they've had an examination, the DFPI then will come in every 4 years, and they've been pretty good in recent years of coming in at that 4 year anniversary. And it still is a surprise audit. It still is unannounced. You're not going to know they're coming in, but it's pretty close to 4 years from when the last audit began. Not from when the last audit ended, from when the last audit began. And they'll show up at the beginning of the day, and they'll be introducing themselves as an examiner with the department and saying they're here for the regulatory exam. And it starts out with a list of items they want to see relative to the escrow trust account, to escrow files, to the general account, general ledger, financial statements, and they give you time to gather the information. There are certain items they want on the very first day of the exam, so they can start the protocol of the examination, and some items you can send to them after they leave for that first day. Now, there are other types of exams that the DFPI conducts, and they're called special audits. Special exams allowed under the financial code because something's come up that has notified the department of a situation. It could be because of a consumer complaint. It could be because there's been some notification of fraud going on in the company, or that has involved the company. Not necessarily fraud that the company has committed, but fraud that has involved the company, such as when there's an outgoing wire transfer that was diverted to a fraudulent person relative to someone creating a scam or hacking into someone's system that then created false information coming to the escrow company and an outgoing wire going to the wrong place. It could be because of significant events involving the company. It could be because there's a change in ownership happening. It could be that there's an application for a branch license. It could be because something has come to the department's attention that they feel they need to come in and take a look at books and records. Now, what do they audit? Let's start from the financial statements standpoint. They want to look at the books and records of the general account, of the operating account, where there's a section called 17210 of the financial code that talks about two requirements that an escrow company needs to maintain. Now, 17210 talks about the net worth of the company. That has to be at least $50,000 for a single company and a higher amount if it has branch locations, and certain amount of liquid asset requirements, that so much in the general account, in the operating bank account, in excess of current liabilities. It has to be greater than $25,000. At the part of this examination, the department wants to make sure that the company is in compliance with that requirement. They also will review the general ledger of the company to make sure they don't see any transactions that they feel are inappropriate for an independent escrow company. The nasty word is kickbacks, to see are they paying out transactions to people they shouldn't be paying out payments to, that give the indication that they were buying the business. So that's what they're looking for. They don't always find them. The odds and the percentage of they're finding damaging transactions is low, but it is part of their examination process. They want to make sure that the bank accounts are reconciled. They want to see if there's any transactions relative to intercompany transactions between the escrow company and related company under the same ownership as the escrow company, or if there have been loans from the owner of the company into the escrow company, and has the loan been properly documented, and 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 are there loans going out to shareholders of the company, have those been properly documented, because they do impact both the liquid asset requirement and the tangible net worth requirement of the escrow company. So that's why it's important that they are reviewing the general ledger as well. The biggest part of the examination, though, has to do with the escrow files, has to do with the trust account, because that's customer money, and that's what they like to look at. That's their perception is making sure that the consumers have been protected. That's what they want to look at, because that's what their main focus is as a regulator of the escrow company and these companies that have the independent escrow license. So with regards to the trust account, they want to make sure the escrow trust account has been reconciled and reconciled timely. And if there's any exception items on that reconciliation, have the exception items been cleaned up and resolved timely. And timely to the department is by the 15th of the following month, meaning if we're looking at the month of May, the May reconciliation they want completed by June 15th of the same year, obviously, and they want to know if there have been any exception items on that May reconciliation that they're resolved by June 15th. Are there any escrow with overdrawn balances, shortages that were caused by transactions going out in excess of funds coming in? They want to make sure that's been resolved. They also want to find out what caused the shortage. Was it a one what we'll call a one-off, meaning it happened just because of a minor incident that isn't likely to happen again, or does it look like there's a common practice going on that they need to be concerned about? They're looking at the escrow trial balance. This is a listing of all the escrow files and how much money is left in that file. Is it a current file? That's one thing. But if it's a file that's older than 6 months since the date of closing, or more than 6 months from the date of opening, and there's been no activity in that file, what's been done to try and evaluate whether those old funds should be dispersed, whether they should be escheated, and we talked about escheatment in a prior podcast. Should they be refunded to a buyer or a seller? Are they still being held for a good reason? Or is there litigation or dispute going on between the buyer and seller? And so it's a situation they want to know, has that been paid attention to? They want to look at the outstanding checklist. And also the department gets concerned when they see outstanding checks that are older than even 3 months. Are people paying attention to that outstanding checklist? And particularly if they're checks going to places that are of concern, such as to an insurance company, to making sure that the fire insurance or the property insurance has been paid? Or is it something where it's going to a lender? Is it possible that a monthly payment uh, the payment should have been cashed, but it wasn't? And so is the lender going to be looking for additional interest, or are they going to feel like the loan hasn't been paid properly? Is it a check going to the Internal Revenue Service or to the Franchise Tax Board that for back taxes that are due? And is that something that is creating a burden or a process that the buyer or seller are going to have more tax problems than they otherwise would see? Or is it just large checks going to buyers or sellers for for proceeds or for refunds that maybe they never got the check? Has there been proper internal controls for following up on these checks? They also want to look at the sequencing, meaning that escrows need to be opened in numerical order. Now, it could be there are different series of escrows within a company, such as each escrow officer maybe have their own series assigned to them, or it may be that certain types of files where refinances have one series and sales have another series. Or if it's a bulk sale, it have a different series. If it's a holding escrow, a different series. But then within those series, that the escrow numbers are being opened in numerical order, that there's not in just random assigning of escrow numbers. How about the daily receipts, the daily checks? Are those being issued in numerical order? Is the banking being done every day? Because that's a requirement. There's a California Code of Regulations section 1732.2 specifically talks about trust accounting records to be kept. The receipts, checks, outgoing wire transfers. Are receipts being issued in the right order? Or is everything going as they need to be, as they need to go relative to the transaction? um, have the reconciliations being done timely every month. It's a situation where there's something known as a manual control summary, which frustrates people in today's world of technology and not doing things manually anymore. But in addition to the software that these companies use, the escrow companies use for for escrow transactions and for escrow trust accounting, the department also requires a manual control summary be kept. This is where it could be something as basic as a piece of paper that says, here was the control balance. This is the total escrow balance at the beginning of the day. Adding up all the receipts for the day and using a 10 key or what we call an adding machine with a tape to it, adding up all the receipts, adding up all the checks, adding up all the receipts issued for incoming wire transfers, adding up all the transactions for outgoing wire transfers. If there's any interest-bearing account transactions, adding those up as well. And starting with the beginning, adding up receipts, subtracting off checks and outgoing wire transfers, and coming to an ending balance. And does that ending balance on this manual control summary equal the same ending balance of the escrow trust accounting system that are had? And making sure that they do. Now, in today's world, with manual control summaries, it doesn't necessarily have to be done with a piece of paper and either a pen or a pencil. It can be done in electronic format of, let's say, Excel or some other type of way of doing it, but it has to be done separate from the escrow software. So if your escrow software has its own way of keeping track of the escrow trial balance and of the daily control activity, that's fine. But the way you do it with your manual control summary, it can't be done within the same format. And it can't be just a matter of copying what the escrow software came up with and putting that onto your sheet. You have to find a separate way of adding up the transactions for the day. And this is a DFPI requirement, and they will require people to do that. Now, with regards to the escrow files, again, the DFPI will pull some files and they will review the files and make sure that proper documentation is in the file. They want to know that receipts are issued timely. They want to know that the documentation showing incoming wire transfers, the documentation for outgoing wire transfers are done properly. They want to know that the escrow instructions have been followed and that the escrow instructions have been properly signed. They want to know that there's authorizations to disperse funds. They want to know if there's any affiliations, meaning if an escrow company is owned by a certain person, that person also owns a real estate brokerage, that there's a disclosure within the escrow instructions that the buyer and seller know that they're affiliated entities. And that's part of the financial code as well. So what can you do to be prepared for one of these regulatory examinations? We call them reg exams for short. The following items should be done, and these items that you should be following should be done every day anyways, not just in anticipation or fear of a DFPI audit. The best results are coming when staying compliance at the forefront and not just when the DFPI shows up. Keep the trust account bank reconciliations current and clean. Any exception items should be resolved timely. Sometimes it's a matter of timing, meaning that a transaction happens on the last day of the month that either the bank didn't know about or that the bank had happened at the bank, but you didn't know about yet till the next day. That's what we call an in transit item, and it clears itself up automatically the next day after the end of the month. But it's the other exception times where let's say a receipt gets issued for a wrong amount or an outgoing wire transfer gets sent out differently than what should have been sent out. These items you want to get cleaned up right away. Review the outstanding checklist. Review the escrow trial balances for old funds and disperse where possible or reissue where possible, making sure you're having contact with your buyers or sellers or borrowers to make sure things are being happen on a timely basis. Come up with a way to audit your own escrow files. Come up with a way to have an internal audit process where whether it be at the time of closing or within a month or two after closing or on a random basis, escrow files are pulled and they're reviewed to make sure that the processes and in performing the audit are being done in a timely fashion or being done properly. There's documentation to support what's being done. And then on the general account side, review your general account monthly. Make sure the account is reconciled monthly. Review your financial statements out of your accounting system or it's being done by an outside bookkeeper monthly to make sure that you're in compliance and also to understand what's on the financial statements. You don't want to just hope that they're right and look at them later. You want to make sure that you're understanding what's being shown on the balance sheet as money in the bank and what's being shown for in stockholders' equity and what's being shown for liabilities and what's being shown on the profit and loss statement. Fees coming in. Are you monitoring your fees to make sure they look like the right amount and that what you thought were being the escrows closed for the month were closed and the proper fees came into the bank account. And just one other epilogue to this podcast is DFPI hot buttons. Right now, they're looking at old outstanding checks to make sure they're actually being monitored and checks are getting negotiated. They're looking at the timeliness of deposits and issuance of receipts. If an incoming wire transfer comes in today, is the receipt issued today? If a deposit comes into the bank, has a receipt been issued? Or if a receipt's been issued for someone bringing you a check to deposit, did that deposit get done timely? Because under the regulations, any money that comes into you has to get to the bank within 24 banking hours. So if it comes in on a Friday, it has to be in on Monday. If it comes in on a Friday and there's a Monday's a holiday, it has to be in by Tuesday. If it comes in on Tuesday, it has to be in by Wednesday. You get what we're talking about. The other thing that they're looking at as a hot button are fee discounts. Are fees being given on escrow transactions across the board in a generic fashion, or are they being given out where only because of a specific escrow coming in from a specific real estate broker, specific real estate agent? You've got to be careful that discounts are being disclosed and they're not being done just as a favor to try and attract more business coming in, because then you're crossing into the kickback um, uh, realm, which you want to stay out of. So they're very sensitive to fee discounts. Now, if you have in your escrow instructions that discounts are being given for certain classes of transactions, it could be if your seller is a builder and they're bringing you a tract of transaction for you to handle the sale. You can disclose that the seller is receiving a builder discount. If it's something where this is a seller who's come to you with 15 other transactions this year, you can disclose seller is receiving a volume transaction discount or repeat customer discount. You can give discounts for senior citizens or for members of the military. You can give discounts for certain classes of repeat customers. You can give a discount if the seller is a for sale by owner person. As long as it's disclosed and people are aware of what's available and what you're doing, then you're okay. So these are the hot buttons that DFPI has been looking for. So a lot going on with the reg exam, but it's no reason to panic. Always call your call us, let us know what's happening, who the auditor is. The examiners from the DFPI, they're good people. I mean, they may be frustrating at times, but they're nice. They'll work with you. They'll be open to what's going on. You may not always agree with them, and you can disagree and have a conversation about them about what they're talking about, but it doesn't mean that they're there to get you. They're not out to get you. They're no different than any other type of auditor we deal with from Internal Revenue Service or Franchise Tax Board. It's not a personal thing. It's just doing their job to go through the exam process. But if you have any questions on exams, you certainly can call us, and you're open to and you're welcome to have dialogue with the department on any issues that you're concerned about or that you don't necessarily agree with them on. So that's the latest from Haas and Dawe with debits and credits, the DFPI reg exam process, and we'll see you next time for another podcast session.